G'day all, Ben here, East West. Going to have a look at uranium in this video. A little bit of a lack of progress on price this week, or at least that's how it sort of felt to me. So let's just jump in and see what we can see. So we'll just start out here with the URA. We're just on the hourly here. So there's a few things that grab my attention here. Look, we do have it, a slowly rising market. So we are sort of trending higher in a sense, but it doesn't look super definitive to me just yet. I think a big part of the reason though is look at the volume. There just isn't any. So since we've had the major flush out low, there just hasn't been much interest in re-entering the stock or accumulating more. So that's a bit of a problem. We need to see the volume start to turn back up as a bit more interest comes into the stock. But as it sits, it almost feels like a large portion of the market's been shaken out. And there just hasn't been enough interest to get back in. So that'll keep things a little bit on the back foot, I think. But there's still a few markers that we just need to keep an eye on here. So this was the first sort of point of call I think we were looking at last week. We're just looking at this because this represents a daily gap. So we've sort of come up into it, which it's lines up with the 50% retracement, of course, of this last leg down. So that was kind of the first, like I said, the first point of call as we're looking at as price began to start to climb back up. So we've sort of got there, but it's not definitive. It looks more like well, I hate to say it, it looks more like a bear flag than some sort of new trend establishing. I'm not sure about that yet, but I am just looking at the cycles of the RSI. So we are down here on an hourly, of course, but I'm just looking at the cycles of the RSI, and it's just look like it's just starting to run out of puff a little bit up the top here. So what I'd be careful of from here is sort of any subsequent pullback from here. I would just like it to hold this area. It doesn't necessarily have to, but it would just be a nice sign if it could come in here and hold and then start to push and fill that gap in and start to come back to attack 50% up there. So that this 50% line, this one here, that represents 50% of this larger swing down here. Okay, and then of course after we tick that box, the last box to tick in terms of the retracements would be a little bit higher to take the entire move in. So we're a fair way away from that. One port of call at the time, I think. Point of call, I should say. Now, just one or two other things. The EMAs now that are starting. Well, look, that they've sort of held it. They've ridden it on the way back up. We're just getting on the other side. Now we're on a 1 hour here. So these lines would represent the 10 and 20 period EMA. So just for the hourly, of course, this yellow line is the 50 period EMA on a weekly basis. Okay, so that remains overhead, and that nicely ties into our retracement area that we're trying to target. So far we've ridden these pretty well. We've just turned back under them as we come into Friday. And that sort of ties in with the RSI. So I'm sort of half expecting that maybe this is going to just now have a little bit of a retrace before we decide if we want to come back up or if we're gonna go back deeper. Time will tell, but this is just a little something to keep an eye on. If you want more information about these EMA riders, check out the Red Devil. He's definitely much better at this than I am. But certainly we've had this nice little sort of sloping channel coming back up. But like I said, there hasn't been the volume, and that's what makes me a little bit suspect about it all, that we could just come in for a little bit of a downturn. So like I said, just keep an eye on the retracement. See if it does retrace. Let's see where it holds. Okay, just coming in to look at CCJ now. Same sort of thing, right? We did have this little trend going, but we sort of... Well, we can get rid of that trend channel because it was only ever a guide, and but it's the same thing here, right? The volume is a little bit low, and now we've just sort of had this top that's sort of rounded off, and the market's just starting to come down, back down a little bit. Now that could be a function of Friday, so that could all be blown away on Monday. We have to wait and see, but we can only deal with what we've got in front of us right here. So look, the one thing about this is we did have this gap that has been filled in now, so we can sort of eliminate that from our thinking. But I would still like to see the market get on the other side of the retracement area and then come up and challenge this. Okay, that would be the point of call that I'd look at with CCJ just here. Now, same sort of thing. I mean, there's the danger that the RSI has run its little cycle to here and that we're going to have a little bit of a downturn. And if we do, it's okay. Now, we're just looking at the retracements. There was a couple of ways we could, because we had a nice retracement measured move there. We could take this pivot here and we can come up to that one. We had this, but we haven't made that measured move. Okay, so even coming off this pivot, when we come up here, we've sort of held this area here, which now, this wasn't so much an area now, but if we come off this pivot, it sort of ties in pretty nicely with that. Okay, so that would be the sort of zone. I mean, it goes without saying, right, that looks like the area that you want the market to hold. You want it to be able to come down here, test these sort of short-term lows, and be able to bounce away and keep trending higher like that. But this trend, look, I don't think you need me to point it out to you that it's not very definitive. But we are short-term, so it's kind of, there just hasn't been enough progression from last week to really put a stamp under this. That's how I'm just looking at the overall market. So you could sort of say, yeah, well, we are kind of trending higher, but it's not definitive, and that lack of volume is a little bit of a worry. If we just couple with that, we're just looking at the volume profile from the low all the way up to the close. So here's the point of control as well. So that would just mean, if we start slopping away under this, if we start losing this and losing the point of control, anyone who's sort of been buying on the way back up here is going to start to be put under a little bit of short-term pressure by the market. So, that's just dynamics and psychology of it all. But that's just what we're on the lookout for. We just look out for the psychological progression of the market. Okay, so to get down here, we are going to lose that point of control. But look, there could be a lot more buying that eventuates through here, and this point of control will start to fall, and we'll get a nice sort of setup in the bigger picture where we've got some buying coming in right at the sort of areas where we would hope to see it. So once again, we're just right on the edge with these EMAs. They're sort of coming together as the market's just starting to run out of gas a little bit. Because we might just see like a peel off like this, and if we do, it's okay. It's just, you just want it to hold in the big picture. So it's like I said, it's either off this pivot or this pivot. They're pretty close together. Maybe even you take that pivot and you just sort of encapsulate these wick sort of bottoms, or pardon me, all of them. That would certainly be a fine way to do it. That would tie into the 50. So that's what we're looking for with the 50-week EMA, the overhead there, and these previous lows here that supported the market in the mid $43 area. They remain the near-term targets. So we just look here at UEC. Same sort of thing, right? It's kind of trending a little bit better. And what's interesting here is this is a daily gap, and at the top of that gap line's right up with the 50% retracement. Now, just looking at the volume, there's probably a different way you can look at the volume here, because the way I've got this volume set up is it's just standard TradingView standard 20-period moving average of the volume. But now I've just gone in and smoothed it out to make it a 50. Now the volume is a little bit better, like it's sort of hanging on a little bit more, and this trend is a little bit more pronounced. So I'm just waiting to see if this can actually get up and tag this. At that point, we can sort of come back and start to make a bit more of a decision about if we think this low is in fact the ultimate low. Now, I'm not willing to go there yet on any of this, but we're just looking for signs that the market is starting to truly put in a stronger move higher. That's going to take much more work from any bears to sort of break down. Now, in terms of EMAs, we have kind of slipped back below this, but like I said, once again, I mean, look at this bar. That's, this is my time. How I'll put it into exchange time. This is 1:30 in the afternoon exchange time. So on Friday, so, maybe a bit of cleaning up MOC coming into the close on Friday. People don't want to be long over the weekend. Friday wobbles. Can we put it down to that? But it's sort of held that trend line quite nicely. So this trend line is pretty good. You can even kind of channel it a little bit. Like I said, I wouldn't put a massive amount into this. It's just a guideline, okay? If we just see it just helps to highlight the general shape in the market, general path of price, which is doing a pretty good job to push up. So the warning shot is that we do have a bit of divergence. Well, maybe not great, but we just look at the cycle of the RSI coming up. Is it going to come back down? Now, if it came back down and any retracement sort of just held 40 on the hourly, that'd be a pretty good sign, I would have thought. So once again, when we just look at the paths of the measured moves, there's the first one. All right, we came off the low, we came back, and then we hit the target. So there's one. So we can take this pivot now, and since then, well, you could argue that maybe that's one, but I'd be kind of looking at the whole thing now, and what's not bad. So you know, like this is sort of how you set it up and give yourself some confidence. So you got these tops and these bottoms, and that sort of lines up with that. So you know, coming back here. That's fine. That's kind of what you want to see, and then we can come up here and challenge this, which will tie into that gap, which I've since deleted. So you can see how that goes together. All right, that's just kind of the sort of thing that we're looking for. So, you know, that would be the point of call next week. You'd just be looking for this area. If that one gave way, you're not dead. In fact, that they might even overlap. So if we just highlight the 50 of the whole move there, and then if we just take this back up to this pivot, yeah, it would slip through a little bit. So, but that's okay. You know, give yourself a broader area. All right, like that, something like that. Okay, you probably just don't want to see it lose this. That would be quite concerning. Just in the short term, prognosis of price. Now, just finishing off here with the physical trust. Now, this is obviously a little bit more problematic. We do have these bottoms in here, but the way that the market keeps smashing into this, you would certainly want to see this. I wouldn't want to see it break. You know, I wouldn't want to see a substantial break of the way that price has behaved here. Okay, because it's almost, well, let's even just flick this back out to a daily now, and it's almost a quadruple bottom on the daily. Okay, so there is a floor there, but if that floor gives way, there could be a torrent of selling which could drive us, even further back down. So yeah, this one, this is the canary in the coal mine, I think, in the short term. I just think if this one cracks, we just have to be very mindful of this, because it could have a bad effect on the rest of them. I'm not predicting that's what's going to happen. It's just technically, I would just see this formation thinking, okay, well, the problem is the buyers keep turning the sellers away here, but the sellers keep knocking on the door. So when I see that sort of thing, I just think, well, one side's going to win pretty handsomely here. So look, there's nothing to say we can't false break and then spring back up. Remains a possibility. I think the thing that you don't want to see, Sands this breaks and drops very quickly. What you don't want to see is a breakdown and then a retest of this and then another failure. That would not be a good sign. Okay, just technically. Okay, you can say, well, you don't understand the fundamentals. I'm not trying to understand the fundamentals. I'm not trying to understand what is in the future that could turn price around. I'm looking at price here and now in a purely technical sense. And that is just how I would read this market. That is what I would not want to see. Okay, but in saying that, you could easily get something like that. The quick breakdown, the quick break back up. Okay, the false breakout, which is actually probably what you want to see, because that would lead you to think that there would be trap shorts. Okay, scrambling to get out, and that is going to help to push the price back out. So I'd just be examining this bottom here in the physical trust. Like I said, I wouldn't want to see this give way. I think it's sitting right on that area. It's turning into be something pretty pivotal when it's knocked on the door that many times. So let us just see what happens. But just watch those retracements in the big names. I think see if they hold. Look, we may not retrace. We might just make more progress without the need to. So that is where I'll leave it this week. I don't think there's a truckload to really go through, because the price hasn't really developed as much as we would have hoped. So let's just see what happens, and we'll see you next week. Thanks for watching. Bye for now.